Hey everyone, it's James Santiago from Learn Wealthy, and I'm here to break down what's happening in the markets right now. We've got some interesting moves today. In stocks, the yield curve, and changes in mortgage rates. Oh, and let's not forget what's going on with gold and the global economy. Let's jump right in. Let's break this down. Stock markets are in red. Starting with stocks, it's been a rocky Monday. The S&P 500 is down about 0.4%, and the Nasdaq and Dow are seeing similar losses with drops around 0.5%. Investors are getting more cautious as concerns about inflation and rising interest rates persist. Geopolitical tensions are adding to the market's unease as well. Sectors like tech and financials are feeling the heat, but energy stocks are holding up relatively well. Think of the stock markets like a roller coaster right now, up one week and down the next, and today we're on the downward slope. Buckle up, folks. Now here's something big. After a record of 783-day stretch, the yield curve has finally uninverted. For those keeping track, this means that long-term interest rates are now higher than short-term interest rates once again. Normally, this would be a sign of a recession, and according to historical data, we will know and feel this in a few months. Yield curve inversions have historically preceded recessions. We're still watching closely for signs of economic downturns. Let's talk about mortgage rates. The average rate for a 30-year fixed mortgage is at 6.99%. It didn't come down, right? What happened to all these realtors and mortgage brokers saying, the Fed finally cut rates, so the mortgage rates will come down? Should have been watching my Learn Wealthy videos, particularly this one, so you're not FOMO'd into buying a house right away. In times of uncertainty, there's one metal that's so precious, they called it a precious metal. Investors turn to gold, and today is no different. Gold is currently trading around $2,646 per ounce, still around its all-time high with concerns over inflation, geopolitical risk, and a potential recession. Gold is seen as a safe haven. It's a hedge, especially when other asset classes like stocks are wobbling. Zooming out to the global picture, the world's major economies are flashing warning signs. China's economic growth remains sluggish, and Europe is grappling with its own economic slowdown. Manufacturing output is falling globally, and the latest PMI numbers indicate contraction in several key markets. As the global economy slows, we're keeping a close eye on how this could impact the US markets and a broader economic landscape. To sum it up, stocks are slightly down, the yield curve has corrected itself but even remains more of a concern now. Mortgage rate didn't budge with that Fed rate cut, and gold continues to be a safe bet in a volatile market. As the global economy shows signs of slowing, we might be in for a bumpy ride in the months ahead. Let me know in the comments what you think. Is the worst behind for us, or are we still heading into choppy waters? And as always, for more finance, investing, real estate, and macroeconomics, let's all learn wealthy together.